Okay, good morning, guys. My name is Gavin. Welcome to Alpha Chain's weekly brief. So this is a short, condensed version of what to expect from the week ahead, considering all key factors from geopolitical risk to macroeconomic data to any political risks that are apparent at this current moment. So let's begin with looking at how the UK market is opening at the start of this week. So stock prices in London so far are opening up in the positive. Let's have a quick look at the UK 100. So you can see it's already broke through. This is the 1 hour time frame, 8 o'clock open. We're seeing a bullish move already, sort of surpassing the 7,600 barrier. Now, this is taking place despite today, there's not many drivers, there's not many activity or any themes that are at current play. We know that the US market will be shut for the holiday. It's a holiday over in the US. Martin Luther Day we have in the US. I'll come back to that in a second or so. But okay, so we got no activity taking place in the US. Other than that, there hasn't been any recent news that has come out from the weekend that we need to be, a little bit subdued trading at the beginning of this week. Naturally, we do have a lot of UK political risk at this moment. Boris Johnson is probably facing his most hardship of his premiership so far. So we have the Partygate issue that's been coming out over the last few weeks. He had apologized in the House of Commons last week, and since then there've been a lot of calls for him to resign from his position. Just to give you some sort of key concepts there, right? So after his apology, he did regain some support from the Conservative MPs. There was a little bit of support, because initially, prior to him apologizing, it was almost clear that everyone was going against him, even within his own party. But here are the three key factors that will decide whether PM Johnson survives this Partygate scandal. So this week will be a very important one, because we have Gray's report that's going to be released into the allegations that the PM broke coronavirus lockdown rules and attended these parties at 10 Downing Street. Okay, now with that report, that could be imminent in regards to his departure, in regards to the rhetoric that comes through in this report. So that's one of the factors that could lead to that further political risk and uncertainty in the markets. The second is his number two, the Chancellor of Exchequer, Rishi Sunak, and his decision on whether to resign. If he resigns from the cabinet and tells the Tory party they should remove Johnson from office, that's another factor that could impact PM Johnson with his premiership at this current moment. And the third, and probably the most important one actually, is if we have a large number of Conservative MPs writing letters of no confidence in Johnson. And if that threshold reaches 54, that could see him face a vote on his position. Okay, now that is probably sort of the one that's likely to occur. It just doesn't seem PM Johnson is ready to give up his role at this current moment. I'd rather, it would probably be through these letters of no confidence. If they reach 54, then for sure there will be a new vote on his, another vote on his position. So yeah, I mean, that's the sort of key factors mentioned there, but we're still seeing a little bit bullish emphasis in the UK markets. And I'll tell you why that is, right? I'll tell you why that is. The UK market has been seen undervalued in comparison to other equity markets throughout the year of 2022, and possibly even a partial part of 2020. So the UK market has been underperforming its European counterparts, but also, most importantly, the US counterparts. And therefore,
geopolitics here, Russia and Belarus said to hold military.
Let me just minimize that. Therefore, as we've seen these views of raising interest rates by the Fed and globally, that then the indication is that money managers will be looking to now put their capital into assets that have a decent amount of cash flow or are seen as a value play. And that's why the stock market is undervalued in comparison to those other equity markets. And that's why we're seeing it move in a very bullish direction. Going on to the daily time frame, you can see sort of the breakout has occurred with this trend line in place. And we're coming up to the first key level resistance, close enough to 7,700. Okay, so 76.94 in that region there. So yes, UK markets optimistic considering the political risk at this moment. But again, the probability that's occurring is minimal of him resigning. It's more likely there'll be a vote of no confidence, and then there'll be another vote of on his position. So yeah, we still have sort of a lot of time there. Now, for the upcoming week, there are two main factors that I'm going to be concerned about. Naturally, the UK economy, we have political risk, but in addition to that, we also have latest wages in the UK, unemployment rate in the UK, as well as the inflation numbers, and this is all giving us an indication of how the UK economy is going to fare. Let's bring up the economic calendar. Let's have a look at the economic calendar. Just going through. I might touch on that in a little while, come back to that, but I believe, yeah, so we have starting Tuesday, 7 a.m., we have average earnings. Okay, so we start off with average earnings as well as the unemployment rate. Okay, so these are sort of two key factors to consider in regards to sort of the UK economic activity. And then we move on to Wednesday. That's where the high impact and most relevant for the Bank of England to raise rates is the inflation report. And we have the CPI year-on-year figure, core CPI, the PPI figures as well as the RPI. So all the figures are coming out all in one go Tuesday morning. So that's the sort of other key factor as mentioned there. So yes, I think it's going to be a very important week for the UK. And at the end of the week, we have retail sales month on month. Okay, so we have retail sales month on month. So I believe that this week's going to be a focus on the UK markets, whereas last couple of weeks has been focused on the US economy and their actions and with their minutes as well as their speeches and some of the data, for example, CPI hitting a 40-year high, right? So now it turns over to the UK markets. In addition to this, another one to be aware of is the Bank of Japan has gone into a two-day sort of closed door meeting, and tomorrow, early in the morning, we're going to have the BOJ outlook report, monetary policy statement, and policy rate. Now, it's very unlikely they're going to, well, it's probably 0.00001% probability of a rate hike or rate sort of change. It's all about their guidance. That's what we look for from the Bank of Japan. Okay, so what is their monetary policy outlook? And we're just going to see what their settings, how they're going to manage their policy settings for the upcoming months. What's their view in the current sort of climate with the Omicron coming into a new year and so on, and inflation, of course. So we do have that also. Okay, the only factor that I could potentially sort of cover that's what's already been released is the Chinese GDP. Okay, Chinese GDP has been released overnight. Now, China's, during the course of just after 2020, sort of the pandemic lockdown restrictions, we've just come out of that restrictions and sort of mid 2020. From that point onwards, China's economic growth was almost defying, right? They just continue to show very strong growth over that period of time through into 2021. But the final quarter of 2021 came in at the lowest it has been prior to those prior quarters. Okay, so this is the world's second largest economy. It's a key driver for also global growth. And overall in 2021, it expanded by 8.1%. Okay, and that's on its sort of strong virus recovery. It beat the forecast. The forecast was meant to was 8%. It was 8%, and then AFP poll carried out. So just beat that by 0.1. And the reading itself for 2020 was 2.3%. So we've seen 2.3% in 2020, and in 2021 we've had it. It's now at 8.1%. But do remember, much of that growth came in the first half of the year. So in the early sort of first H1 of 2021 is where we saw the majority of the growth that's come through. And there's been a series of shocks that has occurred towards the end of 2021. Well, most of you should be aware of the Evergrande situation and the housing situation in over there. So just have a quick look at the GDP itself. So let's have a look at the graph. Yeah, so this is what the picture looks like. Let's just remove some of that view there. Let's just go back by that amount. There we are. Okay, so this is what we're looking at. So it came in weaker than expected. Okay, so that's the sort of key point there, is that we're seeing a slowdown in overall economic growth. You can sort of reverse this as this sort of coming out of the pandemic, and the first quarter into 2021 was one of the strongest ones. But thereafter, if you sort of normalize this, look at the averages, we're seeing weakness in their overall GDP levels. Okay. Okay, so now we've covered sort of the slowdown in Chinese sort of GDP growth. It did cause some worries in the markets. It did cause some worries in the market. But overall, if we just look at the Asia markets, they were quite positive overall. Okay, so we didn't see too much in the Asia markets from a, let's have a look. If I come over to, Nikkei will be a good one. So looking at the Nikkei. So we're looking at the Nikkei 225. Again, not much reaction, mostly moving sideways. This is the Hang Seng. This is on a daily time frame. So a slight retreat there, but nothing significant. China 50, a bit more of a decline, but again, nothing significant from this report itself. So overall, the markets were yeah, kind of muted overall, Okay, so moving on from there, as I mentioned, today is Martin Luther King Day in the US, and therefore markets around the globe will have to manage without US activity and the volume that US markets bring. Okay, let's bring it back to mobile. So yeah, just look to focus on European markets. FX markets, there'll be a lack of volume, but you can still trade those markets. Crypto markets as usual, so there's no changes there. And as I mentioned, so the key factors I've already covered. I'm going to be focusing on the Bank of Japan with their rate decision coming up overnight. Then we also have three types of data being released that concerns the UK economy, from wages to unemployment to inflation numbers, but also we have retail sales at the end of this week. But we are going into what is important now is earnings season. Okay, so we are heading into earnings season. Now, earnings season began on Friday last week, so it's already begun. And there were some good figures, but also poor ones as well. So JP Morgan's figure came out quite positive, whereas Citigroup's numbers come out quite negative. It was poor numbers. So what we're looking for is, is there going to be a consistency in what we see across earning reports that are being released throughout this week now? So last week, Friday, we had some reports come through. This week, we're going to see an increase in the number of reports being released. But the overall view is, okay, how are these sectors, how are each sectors faring, right? So one of the key sectors focused on right now is financials, looking at sort of banking stocks, for example, and seeing how they fare overall. So far, we've got one positive with JP Morgan, but we've also got one negative with Citigroup. I believe we have some more reports being released, not today, but from tomorrow. So let me just bring that over. Let's quickly, okay. Yeah, so this is sort of the breakdown for the week ahead. Okay, so Goldman Tuesday, that's before the open. We also have Bank of America before the open, Morgan Stanley Both are being coming out on Wednesday. Yeah, just be mindful of what types of reports are being released. And what we're looking for is if we start to see a lot more profit warnings or coming in weaker than expected, that can indicate, okay, we're sort of, in an economy where it's too hot, rate, and we're sort of in an environment where we're raising rates as well, which is not going to be great for most corporations. And yeah, that could have a bit of a pessimistic turn in the sort of markets overall. But yeah, we do have a couple of tech stocks as well, sort of being released as well. So we've got Netflix towards the end of the week, Thursday there as well. So yeah, put a bit of emphasis on keeping up to date with the reports, right? And generally reports, these earning reports that are released, that in most circumstances are released either before open or after the close. Okay, they're released before or after the markets, after the sort of the US markets. So just be mindful to sort of have that view to check what's been the sort of overall feeling from these earning reports that are being released. Of course, I'll be here to sort of give you further guidance in regards to ongoing commentary with these earning reports, but please do and spend time carrying out a deep dive for yourself.